Is Bitcoin only for people with deep pockets, like Michael Saylor and Cathie Wood? No, in fact, it's not. Welcome to our guide on how to buy Bitcoin, even if you're on a tight budget. Let's debunk some misconceptions and show you the world of cryptocurrency is accessible to everyone, regardless of your financial status. We'll even give you some helpful tips to keep in mind. Just remember that this is not financial advice. This video is for entertainment purposes only. The misconception of Bitcoin's affordability. When Bitcoin headlines scream about it reaching new all-time highs, it's easy to feel like the train has left the station, especially if you're not flush with disposable income. Many believe that Bitcoin, with its often soaring prices, is a playground reserved exclusively for the wealthy elite. But here's the truth: Bitcoin is for everyone. One of the most beautiful aspects of Bitcoin is its fractional nature. You don't need to buy a whole Bitcoin, which might be priced way beyond what many can afford. Instead, you can purchase a fraction of it, known as a Satoshi. With just a few dollars, you can own a piece of this digital gold. This fractional buying allows those with even the most modest budgets to enter the world of cryptocurrency. So the next time you think Bitcoin is only for the rich, remember that it's designed to be inclusive, allowing everyone a chance to be part of this financial revolution. The art of dollar cost averaging, a deep dive. Dollar cost averaging is more than just an investment strategy. It's a philosophy. Rooted in consistency and discipline, dollar cost averaging is a method that has been championed by many investment gurus, especially when navigating the choppy waters of volatile markets like cryptocurrency. So, what's the essence of dollar cost averaging? It's all about pacing oneself. Instead of pouring a large sum into an investment all at once, dollar cost averaging promotes the idea of fragmenting that sum and investing it at regular intervals. For instance, if you're looking to invest $1,000 in Bitcoin, rather than making a one-time purchase, you'd allocate, say, $100 every month for 10 months. The power of dollar cost averaging, why it's a game changer. 1. Combating volatility. Cryptocurrencies are notorious for their wild price fluctuations. One day you're on a high, and the next, you might witness a significant dip. Dollar cost averaging acts as a buffer against this unpredictability. By investing consistently over time, you end up purchasing more units when prices are low and fewer units when prices soar. This approach can average out the acquisition cost in the long run, potentially shielding you from the brunt of short-term volatility. 2. Taking emotions out of the equation. The crypto market isn't just about numbers. It's a whirlwind of emotions. The exhilaration of a bull run, the anxiety of a bear market, the temptation to follow the herd. These are feelings every investor grapples with. Dollar cost averaging is like an emotional anchor. By committing to a predefined investment schedule, you minimize the risk of impulsive decisions driven by market hysteria. 3. Accessibility and affordability. Not everyone has a hefty sum lying around to invest. Dollar cost averaging is the beacon for those with limited means. It democratizes investment, allowing individuals to contribute smaller amounts periodically. This approach is not only easier on the wallet, but also psychologically less daunting for newcomers. 4. Harnessing the power of compounding. As you consistently invest and potentially earn returns on those investments, you set the stage for compounding. Your returns start generating their own returns, and over time, this can lead to exponential growth. Dollar cost averaging, with its regular contributions, can amplify this effect. 5. Timing the market versus timing the market. Predicting market movements is a gamble, even for seasoned experts. But by buying regularly instead of in just one lump sum, you shift the focus from trying to time the market to spending time in the market. It's a long-term strategy, emphasizing the journey over individual pit stops. In the dynamic realm of Bitcoin and other cryptocurrencies, where the only constant is change, dollar cost averaging emerges as a stabilizing strategy. It's a testament to the age-old wisdom that in consistency there lies power. By regularly and methodically investing in Bitcoin, you're not just hoping for short-term gains, but building a foundation for potential long-term growth. Setting up automatic purchases. In the world of investing, consistency is key. While the allure of making a large one-time investment can be tempting, especially when the market seems favorable, the reality is that most of us don't have the luxury of dropping large sums of money on a whim. This is where the magic of automatic purchases comes into play. The power of consistency. Think of your investment journey as a marathon, not a sprint. It's not about how fast you can pour money into an asset, but how consistently you can do it over time. Small regular investments can compound, and before you know it, you've built a substantial portfolio. This approach is especially beneficial for those on a tight budget. By dedicating a small fixed amount of your income regularly, you're prioritizing your financial future without breaking the bank. How to set it up? Many cryptocurrency exchanges and platforms offer the option to set up recurring purchases. Here's a simple guide. Choose a reputable platform or exchange that supports automatic Bitcoin purchases. Decide on the amount you are okay with investing regularly. This could be as low as $10 or $20. Set the frequency of your purchases, weekly, bi-weekly, or monthly. Link your bank account or payment method. Enable the automatic purchase feature and voila! The platform will handle the rest, purchasing Bitcoin on your behalf at the set intervals. The snowball effect. It's astounding how small amounts, when invested consistently, can accumulate over time. Let's say you set aside just $20 a week. That's $1,040 a year. Over 5 years, without even accounting for potential appreciation in Bitcoin's value, you'd have invested $5,200. And if Bitcoin's price rises over that period, your investment could be worth significantly more. Automatic purchases make the investment process more accessible to everyone, regardless of how much money they have. By leveraging this strategy, you're not only investing in Bitcoin, but also in a disciplined long-term financial habit that can pay dividends in the future. Here are some other tips to keep your crypto goals a little more in reach. Sacrificing today for a better tomorrow. Every financial journey begins with understanding one's current spending habits. It's astonishing how many seemingly insignificant expenses, when accumulated, can amount to a substantial sum. That daily gourmet coffee, the impulse online purchases, the premium subscriptions you barely use. All these can be potential savings redirected towards investments. Consider this. By merely cutting out a $5 daily expense, you save $150 a month. That's $1,800 a year. Now, imagine redirecting this amount into Bitcoin or any other promising cryptocurrency. Over time, especially with the power of compound growth, this can lead to significant portfolio growth. Pay down debt first. It may make sense to tackle some debt first, especially if you have high interest rates. This will leave you feeling a little less thinly spread, trying to invest in crypto and cover monthly payments at the same time. Work on getting some of those credit cards paid down a bit, then really doubling down on Bitcoin is definitely a smart move. The essence of budgeting. Before diving into the crypto pool, one must first understand their financial landscape. This means tracking every penny that comes in and goes out. By having a clear picture of your finances, you can identify areas of wastage and potential savings. Numerous digital tools and apps can assist, making budgeting a seamless part of daily life. Starting small, the power of consistency. Like we said, the crypto journey doesn't necessitate grand gestures. It's not about pouring thousands into Bitcoin on day one. Instead, it's about consistent, informed decisions. Even a small, regular investment in Bitcoin can yield impressive results over time, especially when you consider its potential for growth. Staying informed. The ever-evolving crypto landscape. Cryptocurrency, by nature, it is dynamic. Market trends shift, new technologies emerge, and regulatory landscapes evolve. As an investor, staying informed is not just advisable, it's essential. This means regularly consuming content from reputable sources, joining crypto communities, participating in forums, and continuously educating oneself. Knowledge in the crypto world truly is power. Emotional investing, a pitfall to avoid. The crypto market is notorious for crazy volatility. Prices of assets can skyrocket one minute, and they can also crash to nothing the next minute. Emotional investing, where decisions are driven by the euphoria of highs or the panic of lows, can be detrimental. Having a clear, well-researched strategy and sticking to it, irrespective of market fluctuations, is key. It's about the long game, not short-term reactions. FOMO is not a trading strategy. Diversifying learning sources. While there's no shortage of content creators in the crypto space, it's crucial to diversify one's learning sources. Channels that break down complex topics into digestible content are perfect for beginners. For those looking for a deeper understanding of blockchain and cryptocurrency, more technical sources can be invaluable. And for insights into market trends, channels focusing on broader crypto landscapes can offer valuable perspectives. We'll have 2 crypto videos a week for you here, so be sure to subscribe if you haven't already. Cultivating the right mindset. At its core, cryptocurrency investment is as much about mindset as it is about money. It's about viewing money not just as a means to an end, but as a tool for growth. By cultivating financial discipline, continuously seeking knowledge, and approaching the crypto world with a blend of caution and optimism, even those on the most stringent budgets can carve out their success story in the Bitcoin narrative. The world of Bitcoin and cryptocurrency might seem like a playground reserved for the elite, but as we've explored, that's far from the truth. Every individual, regardless of their financial standing, holds the potential to step into this dynamic arena. It's not about how much you start with, but rather how you navigate the journey. Consistency is the unsung hero of investment. Regular, small contributions can snowball over time, leading to substantial growth. But this consistency must be paired with unwavering financial discipline. By making informed choices, cutting back on non-essentials, and prioritizing savings, you pave the way for a brighter financial future. Research, too, cannot be overlooked. The crypto landscape is always changing, and staying updated ensures you make informed decisions. Dive into educational resources, follow reputable crypto channels, and never stop learning. So to every viewer out there, remember, your Bitcoin investment journey doesn't have to start big, it just has to start. Take that first step, no matter how small, and watch as the world of cryptocurrency unfolds before you. The future is digital, and the time to act is now. Subscribe to the channel for more life-changing crypto content, and give us a thumbs up so this video can reach more people. See you in the next one.